All right, we are going to look at this question. You can try to go through. This is on page 11 of our revision and answer questions. Page 11 of our revision and answer questions. All right, thank you so much for getting right here. It's a pleasure to have you this evening. If you're watching this maybe in the morning or whatever time you're watching this, welcome. So my name is Samuel Ibanda, and I'm a tutor of financial accounting at Achievers Professional Trainers. So basically today we want to learn more about double entry. If you followed the previous class, we tried to go through one of the principles. We tried to go through the principles of double entry, and we tried to understand what happens when, say, assets increase, what happens when liabilities increase, what happens when incomes increase, what happens when maybe revenue does increase or expenses as well. So today we want to try out this question and see where we can go. Now, if you try to look at this question, I request that we mute our microphones. Okay. So when you look at this question is Roberto commenced business on that date as a beautician operating as iBeauty salon and services. Transactions for the month of October were, they've given us the transactions here. We can try to look at what is this question requiring us to do. This question is requiring us to, one, prepare the profit and loss of iBeauty salon and services, and it's also requesting us to prepare the statement of financial position for iBeauty. Now, if you've been following our classes very well, we talked about what we refer to as the accounting process. You get it. Now, this question is requesting us to prepare the profit and loss and the statement of financial position, but we don't start from these financial statements directly. We rather have to first go through the accounting process. Now, because you see they have given us the transactions, we may not have to go through original books, the books of prime entry and so on. So what we are going to basically do is we are going to journalize these transactions, or we are actually going to do ledgers, what I could regard as ledgers. So we are going to draw ledgers of these transactions. And once we've drawn the ledgers of these transactions, we shall go ahead to balance them off. We shall go ahead to balance off the ledgers. And then once we've balanced off our ledgers, we shall transfer the balances to the trial balance. And it is from the trial balance that we shall be able to draw up our income statement, which is our profit and loss, as well as our balance sheet. You get it, huh? Yeah, so it's good for you to take note of that, that every time we want to draw up our statement of financial position or income statement, we need to have a trial balance. So in this question, they have not given us a trial balance, but have rather given us the transaction as they are. You get it, huh? So we are going to go through the questions, and then we shall try to see how each of these can basically go. You get it, eh? Yeah, so it's important. I said the question is on page, the question is on page 11 of your Q&A. Okay, question and answer. Question 1.6. Question 1.6. Okay, now I'm going to use an Excel here. So before we can go to where I'm going to calculate my question from, we can just try to run through the questions and brainstorm. One, started a business by contributing capital of how much? Of 120,000. Started a business by contributing capital of UJX 120,000. Now, the capital that is contributed by the business is like equity. So the things that are happening here is capital is increasing, because if the business had zero capital, because since we are starting a business, now the business has capital of 120,000. Now, as capital is increasing, what is also increasing here is cash. Now, cash and capital are different things. You get it? So the capital is the owner's contribution to the business, which we can also call equity. But cash is also increasing. Now, capital can be in form of, let's say, motor vehicle. It can be in form of goods as well. It can be in form of cash. But now this kind of capital is in form of cash. Now, with the double entry principle, every business transaction has a debit and credit effect. Every business transaction has a double entry effect, a debit and a credit. So every time you read a transaction, yours is to figure out which are those two accounts that will be affected by this transaction. And of course, if it's a business transaction. Now, started the business by contributing capital. We are saying we have two accounts here. We have cash and we have the capital of 120,000. Somebody will ask themselves and say, how come this is not bank? Where are you getting cash? Because you cannot see cash. Now, where they have been silent on either contributed this as cash or bank, ideally, you know that if this is a small business, definitely this money is in cash. You get it, huh? But in case it was by bank, they would have specified and said maybe started a business by contributing a check of capital of worthy 120,000 at the end of the day. You get it? Yeah. So that's why I'm bringing in cash here, because of course they are silent on what exactly it is. So it's important for you to understand. Then we have paid rent for the month of October, 12,800. Now, rent is an expense. And since they are saying that they paid rent worthy, okay, so I was saying that we paid rent for the month of October, UJX 12,800, and the rent is an expense. And earlier on, if you're part of the class, you remember very well that we said that when expenses are increasing, we debit them. So we have rent, and then we have cash of how much? 12,800, because they paid for the month of October, that UJX 12,800. So it is presumed that definitely they paid by cash, because we've not had anything to do with bank here. So they paid by cash, of course, from the capital that they contributed, because that's the only kind of money that they have. So they paid rent. So we have rent account, and then we have the cash account. Then we proceed, as they say, purchased beauty supplies for the year ended, for the year UJX 20,000 cash. Now, since this is a beauty salon. This is a beauty salon. So they are buying beauty supplies, just like raw materials. So these are like purchases. So purchases, we'll have a purchases account here. Someone will ask and say, why is it not called a beauty supplies account? Yeah, of course, reason why we call it purchases, every time a business purchases either commodities or whatever for reuse, introduction, then those are like raw materials. So when you buy raw materials, they're like purchases. You get it, huh? Yeah. So beauty supplies of that. Then we have, they're saying, bought fixtures and fittings for the beauty salon. And they have gone ahead to give us what exactly they bought. So they bought chairs, they bought coffee tables, they bought cabinets, they bought massage table, then a fountain. Now, all these, they are fixtures and fittings. Now, these are fixed assets, what somebody else can call current assets. And now they are also telling us that these were bought on credit. From who? From Wellness Supplies. So we have two accounts here. We have the fixtures and fittings account, and then we have the Wellness Supplies. We have the Wellness Supplies account. Now, fixtures and fittings are assets, and assets should be assets when the increase should be debited. Now, Wellness Supplies, in this case, is a creditor, and creditors are liabilities. Now, when liabilities increase, we credit them. So as we are debiting fixtures and fittings with 48,000, we shall go ahead to credit Wellness Supplies with how much? With the same amount of money. So it's important for you to know that. Okay, any questions so far? All right, Michael says I'm following. Okay, good. If you're following, I think there's now. So we beg to proceed. So we are saying that we credit Wellness Supplies and then debit our fixtures and fittings. And then we have the next one where they're saying that paid wages, UJX 2,000 for the first week's work. Now, just like the way we have salaries for, of course, for big corporations, definitely big corporations also can have wages. Wages are expenses to the business. Wages are expenses to the business. So since they are saying that they paid 2,000, definitely we have an expense of wages, which we shall debit, and then we shall credit cash. We shall credit our cash. Reason why we credit our cash is because, of course, our cash is reducing. As our expenses are increasing, our cash is reducing. And when assets are reducing, we credit them. You get it, huh? Yeah. As you follow, please make sure that you drop a question for whatever you may not understand, so that we can be able to support you. So we proceed. They are telling us that bank takings for the first full week of operation, UJX 3,300. Banked takings from first full weeks of operations, UJX 3,300. Now, always, of course, takings is like money that they have been collecting, like weekly collections or collections, banked collections for the first full week of that March. So here we are picking money from cash to bank. We are picking money from cash to bank. Now I'm going to introduce to you something called contra entries. Contra entries are entries where transaction is between cash and bank, and or bank and cash. Those are contra entries. Now this is one of the examples of a contra entry, because money is basically leaving, it's just from cash to bank. It's internal. These are like internal entries from cash to bank, from bank, like you're picking money from one pocket to the other, pocket to the other. Basically, the money belongs to you. You get it? Yeah. And then they're also telling us on 15 is again, he paid 2,000 wages. You get it? So it's good for you to note that. And then they are going ahead to tell us that bought new light fitting, bought new light fitting, bought new light fitting for 2,800 from local artist and paid cash. Bought new light fitting for UJX 2,800 from local artist and paid cash. Now, light fitting is just very similar to what we've just seen with fixtures and fittings. You get it? So this is like an asset to the company. You get it? If they had bought maybe bulbs, maybe those could be expense, but this is something that is we shall capitalize in this case. As we proceed, they're also saying banked takings from second week of operation worthy 5,000. Banked takings for second week of operation, UJX 5,000. Now, this is still, these are like collections as well. So this is still what we are going to do. We shall credit our cash and debit bank, because bank is receiving and asset is increasing in form of bank. As we are reducing our cash, the bank is increasing. So we shall debit bank and credit our cash. On the same day, they also paid wages. Still, what we shall do, we shall debit our wages. Wages are expenses. And when expenses are increasing, we debit them. And then we shall credit our cash. Okay. And then they are saying withdrew 6,000 cash from business for personal use. Withdrew UJX 6,000 cash from business for personal use. And then they're also saying banked takings. Okay, if it's withdrew 6,000 cash from business for personal use, remember we talked about what we call the business entity concept. The business entity concept states that the owner and the business are totally separate legal entities. So in this case, if we withdraw 6,000 cash from business for personal use, here we have what we call drawings, because the owner took money for his personal use. So we have drawings and then cash being affected. So as we credit our cash, because cash is reducing by how much? By the same much, 6,000. As we credit cash, we shall debit our drawings. Drawings can also be in form of stock, whereas instead of taking cash, they can take stock. I think you've seen it with the retailers that sell like consumables, where somebody will take either sugar or posho for personal use. Now, those are drawings in that case. Then we have banked takings. Banked takings for 700. Banked takings, UJX for 700. 100. Now, these takings are like the collections that we've just seen. Basically, what we are doing here is we are moving money from cash to bank. We are moving money from cash to bank. So it's basically a contra entry. And then they are telling us that paid monthly electricity and gas for UJEX 1680. 1680. This is electricity and gas is an expense. So we debit expenses when they increase, and then we credit our cash that was used for making the payment. You get it? So it's important for you to basically understand. Now, if we add this question, of course, last time we were trying to look at the accounting equation. We're trying to look at the accounting equation, and we're trying to look at how each of the transaction affects the accounting equation. So what we shall basically do, just want to clarify, especially for those that might still have issues with double entry. So I would want to give a try to both of them so that you can be able to learn along. Okay, so let me do, these will be ledgers. These will be ledgers. And then this will be the accounting equation. It will be the accounting equation. So I'll do this. Okay, so we have started the business by contributing capital of 120,000. Now, if it is an accounting equation, we say that we have to first do assets. We do the accounting equation. Assets are equal to liabilities. Sorry, we put it here. Assets are equal to liabilities plus equity. Or capital owners equity, whatever it is. Okay, so once you have your accounting equation there, yours is to go back to the transaction and basically find out how each of the transaction will affect our accounting equation. So our question, if we are to go back to our question, the first question is saying that started a business by contributing capital of 120,000. Capital of 120,000. Now, we say that in such a situation, we have two things, cash is coming in. So yours, when you're doing an asset, okay, an accounting equation, yours is to find out, is there an asset in this transaction? Of course, yes, we have cash that is coming in of 120,000. And then is there a liability? Definitely no, because we are not borrowing money. Is there equity? Yes, because the owner is the one that is contributing this in form of capital. So we have, that is how our equation affects. And as you can see, our assets are equal to our liabilities plus owner's equity. You get it? So you have 120 here, you also have 120 here. You can even go ahead to do your total just to demonstrate that. So you have 120,000, and then you also have 120. Here there is nothing, and that is why we don't have anything there. You get it? Eh? So your accounting equation has really has been able to basically balance. You get it? Eh? So it's important for you to understand that. So what you do when it comes to ledgers, we shall have two accounts. We have the capital account. 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 And then we have the cash account. We have the cash account. So since the transaction is telling us that contributed 120,000 in terms of capital, what we are going to do when it comes to our account here, capital is credited when it's increasing. Remember our acronym of Alice. Alice, this is income. Alice, this is capital. Capital. Sorry. And these are expenses. Like that. So we have two things here. When each of this is increasing, when each of this is decreasing. And we say that when an asset is increasing, we debit. I'll use DR. When it's decreasing, we credit. This, when it is increasing, we credit. This, when it is decreasing, we debit. Like that. Income, when it's increasing, we credit. When it is decreasing, we debit. Capital increasing, we credit. When it is decreasing, we debit. We do the opposite. Expenses, when increasing, we debit. And when they are decreasing, we credit. Like that. So that is what happens when we are using ledgers. Now, I'm doing their ledgers and accounting equation for you to understand how these two play. You get it? Huh? So you shouldn't get confused. Now, what I'll do here, I'll come from my date here. They're telling me that it was 1st October when this happened. So I'll write 1st October, my date, 1st October. Just decrease my date column. Then I'll put the narration of what exactly happened. This is cash. Now here we're going to just start using like a single name, cash. And this cash is the alternative account. You get it. So what you're putting under your details is the alternative account, cash, and then we have, of course, it is 120,000. Remember, we are crediting. This is our credit side, and this is our debit side. So we are crediting because when capital increases, it is credited. So that is why we are crediting in our capital account. Now, when it comes to the cash account, definitely cash is receiving. You get it, eh? So with the same date of 1st October, I have my capital here, capital worthy 120,000, like that. Now, of course, when we are recording in ledgers, one of the things that you should take into consideration is that we use the alternative account name. Here we called it cash in the capital account. Again, you don't call it capital. The same thing with the cash account. We called it capital. You get it, eh? So that is how. So this is how we would record this transaction within our ledgers. And this is how we would record it in the accounting equation. Now, this question has not asked us to draw the accounting equation, neither has it asked us to draw the ledgers. But one of the things that you need to know is that when we draw up the ledgers, we're able to balance them off and get a trial balance, and then we can be able to prepare the P&L and the balance sheet that the question has asked us. I just brought in the accounting equation for you to be able to relate and be able to get some information, because the examiner can actually set you these questions as they are and ask you, please determine how each of the transaction affects the accounting equation. So paid rent for the month of October, 12,800. Now, rent is an expense, like we said. So we are going to have the expense account of rent. We are going to have an expense account of rent. And then we shall affect our cash account. So I'll have the rent account. And then for the cash account, since it already exists, I will not have to draw a new one. You don't have to have an account for each transaction. As long as it exists, you don't have to draw up a new one. So the transaction is saying paid rent for the month of October, UGX 12,800. So what I'll do, when expenses are increasing, you remember, we debit them because rent is increasing by us having. So what I'm going to do, I'm going to come here and say, I'll put my date, which is 2nd. So I'll record it here, 2nd October. I'll put the alternative account I paid by cash, and the value here that we have is 12. The value is 12,800. The value is 12,800. It's 12,800, like that. So that is what we basically have. And then what we also have is the cash account. So we shall come to the cash account here. In this case, since it's a payment, 12,800 reduces our cash. And remember, from here, when our assets are decreasing, we credit them. Cash is an asset, is a current asset, so it is decreasing in this case. So we shall come here and credit it. This is 2nd October. 2nd October, we have our, since it's cash here, I'll call it rent, the alternative account, and I'll give it its value, which is the 12,800, like that. So that is how it will appear accordingly. So if I'm to bring it to the accounting equation here, I want you to be very attentive here. Now, as you can see, in the accounting equation, we don't have expenses. We have assets is equal to liabilities plus equity. Asset is equal to liabilities plus equity. So what I'll do, I'll bring my headings here again. I have, the question is, does this transaction affect my cash? Yes, it does affect my cash because you're paying rent worthy 12,800. You get it, eh? So your cash that was 120,000 will now reduce by how much? By 12,800. So your cash will now be 107,200. So you will come here and say cash is equal to 107,200, like that. The other question is, does this transaction affect my liabilities? No. Why? Because we are paying rent. We are basically paying rent as it comes through. So there is no liability here. So the liability is still at 0. The other question is, does this affect my equity? Does this affect my equity? Now, as we proceed with our studying, you'll get to understand that equity is not just capital. Equity is not just capital. Remember, equity, we're trying to look at, of course, the residue of assets after removing liabilities. Now, equity can also be, apart from capital, which can also be share capital for corporation, equity can also be reserves. We can also have reserves. These can also be called maybe general reserves. They can actually go ahead to include the word general reserves on it. Reserves. Equity can also be retained earnings. Can also be retained earnings. Or sometimes they call them retained profits. Sometimes they call them retained profits. Now, when we are drawing up our financial statements, remember our financial statements we have the statement of financial position, statement of comprehensive income, Then we have the statement of changes in equity. Then we have the statement of cash flows. Now, what do I want to stress here? These statements have a relationship in them. And there is also an order on which statement has to be drawn first before the other. You get it? Now, when you're drawing up the financial statements, the first financial statement that we draw up is this, the statement of comprehensive income. And your question should be, why not the statement of financial position? It's because part of what goes in the statement of financial position comes from the statement of comprehensive income. And what exactly comes from the statement of comprehensive income that we take to the statement of financial position is our retained profits or retained earnings. Retaining earnings, which are also profit for the year, profit or loss for the year. Sorry, I'll try to remove this. So this itself is what comes from the statement of comprehensive income to go to the statement of financial position. So after you've drawn up your statement of comprehensive income, the next you should draw up is this, the statement of changes in equity. We shall see as we proceed how our statement of changes in equity looks like. Now, changes in equity is trying to look at, of course, like the way it's trying actually to look at how these are changing within the period. Remember, you have, for example, capital that you've started with at the start of the financial year. As the business goes through that financial year, you could have an additional capital contribution from someone. Of course, you could have some money that is put on the general reserves. You could also have retained earnings, either increasing or decreasing, depending if the business has either made a profit or loss. So it is the statement of changes in equity that looks at each of these equity items. If you even look at the format of this, you'll get to realize that it has each of these as columns. We shall see how each of them looks like. Now, I beg to proceed here. From the statement of changes in equity, you move to your statement of financial position. And then lastly, you drew the statement of cash flows. Of course, we also have notes to accounts. Yes, the notes to accounts, of course, those come later on after all these have been drawn up. So what I wanted to stress here is part of this equity that you see in this asset equation, it's not only capital, but it also includes all these. Now, because we don't have expenses and incomes in the asset equation, they are catered for under equity. And the reason why they are catered for under equity comes here, because under equity, we have capital reserves, but also we also have retained earnings or retained profits, which come from our P&L. Now, remember, for you to calculate profits, when you're drawing up your statement of profit and loss, the profits are looking at income less expenses. They are looking at income less expenses. You get it? So the higher up the profits, the higher the equity. You get it? Because it's like the owner is making profits. Now, sometimes the owner can decide to take these as dividends or remain with this money within the business to grow it, but it remains as part of equity. So what we are saying is, if we have an expense, a transaction that has an expense, then we go ahead to effect it on equity. You get it? So in example, in this case, where we have, they're telling us that they had rent to the tune of 12,800. What we shall do is, when you look at our asset equation here, rent will affect equity. Now, since it is an expense, expenses affect equity negatively. because it means that expenses reduce our profits. So as they reduce our profits, they also reduce our equity. You get it? So what I'll do here in my asset equation, I'll come and say, I'll include capital. Capital. Now, capital is not changing. Capital is actually remaining the same. So what I'll have here is called retained earnings. Retained earnings. Now, no matter either it's a profit or loss, it all falls under retained earnings, or which other people can call retained profits. So my retained earnings will reduce by how much? By the amount of rent, which is how much? 12,800, which is 12,800. So that is what I'll have. So let me try out to add on my asset equation and see. So here I have 107,200, and right here, when I get 120 and remove 12,800, definitely I'll still come to 107,200. I'll still come to 107,200. You get it? So this is how my asset equation has been affected for this transaction. You get it? So I hope we are following, and I hope we are understanding all this. So that is how I've affected that. We shall try to do the next question. We shall try to do the next question, which is telling us that purchased beauty supplies. They are telling us that we purchased beauty supplies worthy. The beauty supplies are worthy 20,000. The beauty supplies are worthy 20,000. Now, the beauty supplies, like I indicated, is like, let's say, like inventory. Maybe this will be waves and so on. You get it? Huh? This is like inventory. This is like inventory. So what we shall do here, it's like stock. You can call it stock. So we are going to, as we proceed, of course, this is a trial question. As we proceed, we shall try to learn how each of these might play. You get it? Either raw materials or supplies. So the word supplies is a bit general. You get it? It's a bit general, especially for a beauty salon. So what we have here, for matters of this question, maybe what we can try to consider is that this is like inventory. This is like inventory. So what I want to do is instead of I want to bring in either inventory or purchases, whatever it is. So I would want to bring in an inventory account here. I'd want to bring in an inventory account so that we can be able to learn. So I have an inventory account. So inventory is stock is inventory, and inventory is a current asset. So what happens, either you can call it inventory account or you can actually call it beauty supplies account. Beauty supplies account, like that. So beauty supplies, if we are looking at it as a current asset, when assets are increasing, we have to debit them. And since we are, they are telling us that these were purchased by cash 20,000, then we shall affect it here. This happened on the 3rd. So 3rd October, I'll try to 3rd October. Definitely, I'll put my beauty supplies here. My beauty supplies. Sorry, I left out here. So beauty supplies. These were to the tune of 20,000 cash. 20,000. Then I'll come to the beauty supplies account here. Beauty supplies account, still it is 3rd October. 3rd October, and I'll say cash. I'll say cash. And here it is the same value. There we have done the double entry. Every transaction has a debit and credit effect. So when I come to my accounting equation, this is what is going to happen. This is what is going to happen. I'll pick my heading there, put it there. I'll ask myself, does this transaction affect cash? Yes, because I'm paying by cash. So my cash here, that is 107,200, will now become 105,200. I'll remove 20,000 from it. Does this transaction affect my liabilities? No. Why? I'm paying by cash. Does this transaction affect my capital? Yes. No, it doesn't affect because there's no owner's contribution. The same thing with the retained earnings. In this case, this is not an expense. If you're buying like inventory, inventory is not an expense because you've not yet utilized the inventory. So what is going to happen, in addition to cash, as cash is reducing, we have a new asset, which we've already called beauty supplies. You can either call it inventory or beauty supplies, whatever it is, it's the same thing. So we have beauty supplies to the tune of how much? To the tune of 20,000 coming in, like that. To the tune of 20,000 coming in. Now yours is to do what? To balance off and see. Please go on.
The beauty supply is supposed to be 87. The cash is supposed to be 87,200.
Okay. Just a moment. Okay, the question is saying beauty supplies for the year worthy 20,000. So you're saying?
I get it.
Okay. All right, I would just want to also respond here. Martha Okero says we didn't update the capital account with the 12,800. Now, the 12,800 does not affect capital. The 12,800, though it affects equity, it does not affect capital. It affects another element of equity called retained earnings, and that's why we adjusted our retained earnings. The reason why we adjusted retained earnings by the 12,800 is because it's an expense, so it's a negative to our retained earnings. That's why I'm trying to take a negative. You get it? So it's important for you to take note of that. You get it? Eh? Yeah. The question is saying that, of course, they purchased beauty supplies for the year worth 20,000. Now, the reason why they are calling it for the year, it means that they are giving you a hint that this is stock. You're not just going to use it for October, but it is stock. And since it is for the year, remember, current assets are assets that are consumed within the year. So these are beauty supplies for the year. So they are current assets. You get it? Now, even if it happened on October and you're drawing up, remember you're drawing up your statement of profit and loss for the month ended October, these will be assets because you're going to utilize them even in the next period. You get it? So that is why we took them as assets, these beauty supplies. You get it? Eh? So it's good for us to have that in mind. All right. Beauty supplies, we've already effected this. So when it comes to our,
Excuse me, Sam.
yes.
But when I look at my chart and the beauty supplies, when I subtract the two, I'm supposed to be remaining with cash of 87,200.
Okay. Yeah, this is 107. This is 107. Yes, we can try to calculate this. I tried to use my head. In case you have a calculator, please help to try to do. This is 107,200 less 20,000. It is 87,200. Thank you. So this is 87,200 when you try to use your calculator very well. You could actually be able to, so when you remove 20,000 here, it comes to that. So when you add up all these, when you add up this side and this side, this gives you 107,200. That's what you have. Then right here is the same thing, 107,200. You get it? Huh? Your equation is still increasing. Okay. The subtraction of assets and beauty. Okay. So that is how it would really happen. As you've debited it here, credited it here, this is how you'd affect it in your accounting equation. So you can see the two things are now balancing. You get it? Eh? So we are happy to go. So the next part of the question was saying both fixtures and fittings for the beauty salon on credit from who? From Wellness Supplies. Now, in this case, of course, we'll have two accounts. We'll also have two accounts. We'll have the fixtures and fittings account. We'll have the fixtures and fittings account. I'll just try to copy this. Now, when you're doing this, you make sure you leave enough space because you might have other transactions that might affect that account. So this could be fixtures and fittings. Debit, credit, these are some of the things you should remember, especially in the late hours when you're trying to review your questions to make sure that you're not leaving out anything. Now, in this case, all these are new accounts. We don't have any existing account. So I'll also go ahead to draw up Wellness Supplies account. So Wellness Supplies account, Wellness Supplies account. Now, in this case, they have called it Wellness and Supplies, but these are basically creditors, or what another person may call accounts payable. You get it? Now, every time they specify, of course, the supplier's name, we use the supplier's name. The same thing like with the customer. We use the customer's name as well. So what we have here, they're telling us we bought fixtures and fittings worth 48,000. So we shall come and debit. This was on 4th. So 4th. Here I'll write Wellness Supplies Limited, the alternative account. By how much? By 48,000. By 48,000. Then I'll come to Wellness's account. Now, as fixtures and fittings are assets, and when assets are increasing, we say that we debit. Wellness is a liability. And when liabilities are increasing, we said we credit. So I'll go to Wellness's account and do the same thing. I'll say forth that, I'll put it there. But now instead of calling it Wellness, this will be fixtures and fittings. Fixtures and fittings, like that. Fixtures and fittings. And then I'll proceed to my accounting equation. I'll still pick my headings as they are. Then I'll go ahead, ask myself, does this affect my assets, cash in particular? No. Does it affect my beauty supplies? Definitely no. Does it bring any asset on board? Yes. Fixtures and fittings. Fixtures and fittings. How much of fixtures and fittings? Remember, they have told us it is 48,000. Like that. So that is what I do have. Does this bring any liability on board? Yes. Wellness supplies comes in as a liability of how much? Of 48,000, because we bought on credit and we have to pay these people. Does this affect my capital? No. Does it affect my retained earnings? No, because there is no expense, there is no income. Remember, expenses are different from when you buy an asset, is not an expense. You get it. It's only an expense when you, for example, paying rent, you're paying transport, fuel, electricity, and so on. Basically, things that you pay daily consumables, but you don't, for assets, from the definition of assets, there's an economic benefit that will be gotten from this asset in terms of a cash inflow from the future. If it's an expense, you're paying it, it's already consumed. You're paying it as it is. So this will remain intact. I'll bring it there. Then I'll try now to, if I've finished everything, I'll try to add up. So I'll try to add up. So right here, let me try to add 107,200 plus the new 48,000. You know, it's also good to use your calculator to make sure that you're not messing up. The mind can lie to you sometimes. So I have 15 that. Yes. So that is what I have. Here I'll have 48,000. It definitely, if it's an accounting question, it will already give you an indication. Either you've been able to give the right answer or not. Then right here, I still have my 107. Yes, like that. So is my accounting equation balanced? How can I confirm? Let me add this and this. I'm getting 155,200, which is the same thing as my assets, which are also adding to the same thing. So ideally, my equation has balanced. You get it. So it is good for us to appreciate that, how accounting equation works, as well as ledgers also work. Now, we proceed to our next question. Our next question is saying, Paid wages of how much? 2,000 for first week's work. Wages are expenses, and when expenses are increasing, we debit them. Since we don't have an expense account, we shall go ahead to create one. You don't balance off the accounts before all transactions are done. So wages account, and I'm going to look at the transaction. The transaction paid wage, this was 8th. So this is 8th, and we paid by cash. We paid by cash. How much? We paid 2,000. We paid 2,000. Paid 2,000. So since we paid by cash and we already have a cash account, we shall not have to draw up a new one. We shall just come in our cash account and write 8th, call these wages, and record the amount, which is 2,000, like that. All right. So that is what we shall try to record. Now, when it comes to, after we've recorded our wages there, we can come to our accounting equation and also do the same thing. Okay, I've just copied everything, but I'm going to make adjustments. Question, does it affect my cash? Yes, because I'm paying using cash. By how much? Does it affect my cash? Remember, I have credited by 2,000. So I'm going to adjust this by 2,000. I think to date, I'll get this right. This will be 85,200. You get it, eh? Does it affect my beauty supplies? No. Fixtures and fittings? No. Is there a new asset that is coming on board out of the transaction? No, because wages are not assets. When I try to add this, what do I get? 85,200 plus 20,000 plus 48,000. What do I get? I get 153,200. And then question, does it bring any new liability? No, I'm not. Does it settle any liability? No, I'm not paying any liability here. Equity, does it affect my capital? No, because the owner is neither contributing or taking in terms of drawings. Does it affect my retained earnings? Yes, because they are expenses and they reduce our profits. And as profits reduce, retained earnings also reduce. So what I'm going to do, I'm going to go ahead and effect this by the 2,000. So this will become negative 14,800, like that. You get it. When I try to add this, now it is 120,000 less 14,800 gets me to that. When I try to add these two, gives me 153,200. Does it total to the total assets? Yes, you get it. So you can see how the asset equation works. You understand? So it is that very simple. It is that very simple. And also when it comes to the ledgers, you get it, eh? So it's important for us to appreciate that as it is. I hope we have not any questions so far. Now we have something on 15th. 15th, banked takings, excuse me, banked takings from first full week of operations. Banked takings from first full week of operations. How much? 3,300. This is where I say that we will have things like contra entries, but also for you to note is that before even we look at the contra entries, these takings are like collections. So these are like income. It's like revenue to the company. You get it, eh? And since this is a beauty salon and services, basically it's revenue to them. You may not call it definitely sales because yeah, sales is more related so much onto products, but these are collections. So since we have not yet recognized these collections, we shall go ahead to recognize them. We shall first go ahead to recognize our collections. By doing what? We shall debit our cash. We shall debit our cash and credit our, shall debit our cash and credit our sales or our revenue. You get it, eh? Now, the reason why we first pass it through cash is because they are telling us that these were banked on 15th. Now, we just want to make sure that we create what somebody can call an audit trail. Just reflect that this cash came from this money before it was banked, it was in cash. You get it, huh? Yeah, it's just for that. But somebody else can just do, debit bank and credit sales or credit revenue. You get it. But here we're going to first do the transaction in reflecting cash coming in, and then remove that cash from the cash account and transfer it to the bank account. You get it, huh? So it's that very important for us to pick. Any questions so far? Please, if you have any question, you can type in the chat. All right, no questions so far. So we're going to effect the transaction. Going to effect the transaction where they're saying bank takings of 3,800. So what I'm saying is we shall open up a new account. We can open up a new account to recognize the revenue. A new account to recognize the revenue. And we shall call this, I'll call this revenue account. Yeah. Now revenue is income. Revenue is income. And here we said when income is increasing, we credit it. So we shall recognize income. This was, we shall use 15th because that is when the declaration came in. So 15th, we have our, we are going to first call it cash. We are going to first call it cash because they don't sell using bank. They first sell through cash like that. So once you've recognized this, you go ahead to recognize this in your cash, also cash account. we shall recognize this from in our cash account. 15th, we have our, and call it revenue. This is 3,300, like that. So we have debited our cash and credited our revenue. Now, since these takings were later transferred to the bank account, what I'm going to basically do is I'm going to have another account called bank. I'm going to have another account called bank, and I'll call this bank account. Now, after we've passed this transaction through, here, we are now going to bank this money. So on same 15th, I'll come here and say bank. I'm taking all that money to the bank. How much? 3,300. 3,300. So as I credit my cash book, I'll come and debit here 15th as a debt, cash of how much? 3,300. 3,300. Now this is where contra entries come in as we are trying to do as we're going to do cash books. We shall try to understand what contra entries are. Contra entries are just transactions between cash and bank of the company. So we've tried to bring this transaction here and remove it from cash. So these collections are now in bank. So bank has gained that. So now when it comes to the accounting equation, I'll just try to pick this as it is. Of course, for you should only pick the headings. Now, does this affect on the overall, does it affect my cash? It will not affect my cash here because the transaction has come through and it has gone away. You get it? So I'm not going to affect my cash here. Rather, I'm now going to introduce bank. I'm going to introduce bank of 3,300. I'm going to introduce bank of 3,300. Does it bring a new asset? No. Revenue is not an asset. Beauty supply is affected? No. Fixtures and fittings affected? No. Wellness supply is affected? No. Capital affected? No. Retaining earnings affected? Yes. When you have collections or takings, and that is revenue, the revenue increases your profits. Remember, profits are calculated by getting revenue or income and less expenses. So in this case, yes, retained earnings will be affected. How? Positively. Increase in revenue increases retained earnings. You get it, huh? So my retained earnings that are standing at 14,800 will now be net of that. I'm going to get the negative 14,800, and I'm going to add how much? 3,300. I'm going to add 3,300, and it will give me 11,500 negative. So this will be 11,500 like that. So right here, of course, this total has changed. This total remains the same. This will also change. Let me just try to add here what this total will be. 85,200 plus 330 plus 20,000 minus 48,000 minus 48,000. Oh, this is not minus, it's plus, sorry. Assets are all being added. Gives me that. Then here I have my 120,000. This time less 11,500. This is 156,500. This is also 156,500. So it has been able to balance as well. It has been able to balance. When you add these two, you still come to this value. So you've affected it here, but you've also affected it here. This should not confuse you. Reason why I passed this through the cash book or the cash account is because takings, by them saying from what we are seeing in the question, by them saying that these takings were banked full week takings, this money, this business works in cash. But then this money at the end of the week, it was taken to bank. So I just wanted to make sure that we reflect the two transactions, okay? Then we have this transaction of wages, this transaction of wages of paid wages, UGX 2000. This also happened on 15th. So what I'll do in my question here, I'll go to my wages account. I'll go to my wages account, which is just up here. And these are like new wages. How much? Still it is 2000. But this is on 15th. And it's also a payment. So this is here. Then I'll go up in my cash account and credit. I'll come here, 15th. I'll put wages and put the 2000, like that. You get it? That is what I will do. Now, once I have this, I've now effected my wages. If I'm to come here, since it's on the same day, let me just try to reduce my retained earnings a little more because we know wages reduced. But before that, I need to adjust my cash. My cash will be adjusted because I paid these wages by cash. So I'm going to reduce this by more 2000. Reduce here by more 2000. Then I'm going to reduce my retained earnings. The one that is standing at 11,500, I'm going to remove 2000 to reflect the wages because wages reduce the retained earnings a little more. So here, this will be 13,500. So if I'm reducing this and this is now becoming 13,500, it will get me to 106,500. This is now going to change to 83,200, like that. So this is 154,500. This is also 154,500. I've just tried to affect this because it was on the same date. So you should be able to pick and understand that. Okay. So the next transaction, bought new light fitting from local artist and paid cash. We say that the light fitting is also an asset, just like the way we have fixtures and fittings. So what we are going to do is now, you can actually, of course, some other companies can go ahead to recognize this under fixtures and fittings, but we can also have a separate account for it. So it has no much problem depending on how you operate. Depending on how you operate. So if you have it as a separate account, since we don't have light fittings account yet, can have, call it light fittings. Like that. Okay, I'll remove this. Remember, light fittings, these are assets. And when assets are increasing, we debit them. So what I'll do here, give it a date, 18th. Of course, we paid by cash. And how much was this? This was 2,800. This was 2,800. So I'll come to my cash account. Still, just put the date, 18th, and put light fitting of how much? Of 2,800. Of 2,800. So I've done my double entry. You get it? I'll proceed. I want to show you something after we've done with this accounting equation. So make sure that you can see it. So what I'll just do here with my assets, I'll add a light fitting. Now, if you're writing this, you have to copy all this information and write it there. The examiner expects you to see. So I'll have my new light fitting of 2,800 that has come through under my assets, as you can see there. Then when it comes to liabilities, I paid by cash, so my liabilities are not affected. Definitely, one of the things before I got here, since I paid by cash, it means that my cash here will reduce. So this 83,200 will reduce by how much? By 2,800. So for it to be 804, so I'll just make an adjustment, 804,100, like that. So that is what I have here. That is all for my assets. I've recognized this and I've made sure I affect this. Does it affect my liabilities? No. Does it affect my capital? No. Does it affect my retained earnings? No. So these will remain as they are, as we just have had them up. That's why I copied and pasted here. So when I try to add this, basically, of course, where there is 83,200, here I'll put 80,400. And then where there's 4,800 here, I'll add the light fittings of 2,800. So it gives me 154,500. When I add this, it also gives me 154,500. So my asset equation still balances. So when I come here, where they're telling me that banked takings for the second week of operations, and then paid wages. It's the same thing that we've just done. So what I'll go and do, this time the takings are how much? 5,000. So I'll go in my revenue account. Remember, this date is 22nd. So I'll have my 22nd here. I'll recognize this at cash. And this is at 5,000. So what I'll do, I'll go up here in my cash account. Since it's revenue, 22nd, I'll call this still revenue. How much? 5,000. So I've recognized the cash that comes through. Now, this money is banked. What will happen? Same date. I'm now banking it. I'll bring here bank. How much? 5K. Then I'll go to my bank account. Since I'm depositing now in the bank account, 22nd, bank. This will be cash, sorry. How much? 5,000. Now for us to note, as for you in your bank account you're debiting, when you take this money to the bank, the bank will credit you. And the reason why the bank will credit you is because you a liability to the bank. And remember, when liabilities are increasing, they credit them. You're a liability to the bank because you've kept there the money. The money does not belong to the bank, so you're a liability to them. Anytime you can come for the money, or anytime they have to pay you the money, that's why they credit your account. You get it, eh? So you have to have that in mind, that although you're in your books of accounts, you have this as a debit, in the other side, it will be a credit. So what will happen with my asset equation? I'll just try to copy here and paste it here. Cash, definitely, of course, for matters of here, I just want to make, of course, cash is affected by 5,000, but later this cash is actually banked. So there is no effect on cash. That is why my cash will remain at the same amount. Bank will increase by how much? By the 5,000 that we are banking. So my bank will now become 8K 300. Effect on business supplies? No. Fixtures and fittings? No. Light fittings? No. Wellness supplies? Capital? No. Retained earnings? Yes, because this is sales revenue, and sales revenue increases our retained earnings because it increases our profits. So it increases our retained earnings. So what will I have? I'll pick my 13,500. I'll pick my 13,500, and I'm going to add my revenue, which is 5K, So I'll get 8,500. I'll get 8,500 like that. You get it, huh? I'll get 8,500. So how will my totals look like? Because I've already done that. This is 8,400, 3. Now this has become 8,300. This is 20,000. Just to make sure I'm not you. This is 20,000. Then this is 48. Then this is 2,800. So I have 159 like that. Then right here, 48 remains the same. Right here, this I'll just adjust. This is 8,500. So when I try to get a total here, it is 159,500, which matches my asset equation right there. Okay, so I want to move to our next question. Don't worry, we're about to finish. Before that, I want to recognize, of course, the wages of 3,000. We've not yet recognized those. You just go back and go to just your wages account. Do that very quick. Wages, this is on 22nd. So 22nd, these wages were on cash. And how much were they? 3,000. Recognize them here. Go to your cash book. Just try to pick this. This is 22nd. Wages on 22nd, and these wages were 3,000. The wages were 3,000. So I just move down so we can record our last 3 transactions. Just move down so we can record our last 3 transactions. So our last three transactions, the last three transactions, one is saying withdraw cash. Oh, I've not affected the accounting equation when it comes to the wages that I've just recorded. Could you just allow me just to affect it here? Since these wages were by cash, which is 6,000, I'll come here and affect this. My 80, 400, I'll remove the wages of how much? Of 3,000. I'm trying to record this here. I think I hadn't. So 3,000 gets me to 7. That. So I'll try to record this. This is 7,400. And then wages also affect my retained earnings. So this I'll get to reduce it by 3,000. Takes me back to 11,500. 11,500. So here, I'll try to recalculate this. This is 77,400 plus 8,300 plus 20,000 plus 4,8,500, then plus definitely the 2,800. So this is okay. Wellness supplies remains the same. Right here, this will now be 11,500. So when I add these two, 156,500 matches my 156,500 here. All right. So the other transaction is withdraw cash. Withdraw cash 6,000 from the business for personal use. Now, there we have two accounts. We have the drawings account and the cash account. Since we don't have the drawings account, we shall draw it very fast. We shall draw the drawings account very fast. Okay. So drawings worthy how much? Worthy 6K. So as cash is credited with drawings, here we debit it. This is 24th. So 24th, we shall debit with our cash. How much? 6,000. Then when I come here, this is which day? 24th. 24th. Drawings. How much? 6,000. I've effected it there. When I come to my accounting equation, does this affect cash? Of course, because it took this as cash for personal use. So it took 6,000. So this will become 71,400. Bank will remain the same since he didn't pick from bank. Sorry, he actually withdrew. Okay, 6,000 cash from business. Yes, that is okay. So bank will remain intact because it just took cash. When the word withdrew should not confuse you that he actually removed it from the bank. Then beauty supplies, 20,000 remains the same. Fixtures and fittings remains the same. Lighting fittings remains the same. Wellness supplies remains the same. Capital, now capital will change. Every time we have a change, we have drawings or additional capital, then capital is affected. So capital will no longer now be 120,000, but will be 120,000 less how much was taken, which is 6,000. Sorry. Less 6,000, which gets us to that value. 114, like that. So that is how our transaction will affect. Now, when you're doing the asset equation, yours should be that it will affect two items in your accounting equation. So here, I'll try to re-add up here. This has now become 7,400 plus 8,300 plus that. Wellness remains the same. Now this has changed. This is instead of 120, we have 114, like that. So remember, if we withdrew, does it affect retained earnings? This is 150,500. This is also 150,500. So we are good to go. We are good to go. Second last, banked takings for 700. Banked takings for 700. Now, the same thing we've just done with the banked takings earlier on, can just run through. This is now for 700. Shall just come to our ledgers here. Remember, our revenue, and this date is 27th. So just come here, record your 27th, record 27th, and how much we can first recognize the cash of 4,700. Take it through the cash book, the cash account. 20, this is 27th. 27th. This is still revenue of how much? Of 4,700. Of 4,700. Then this money is later banked on the same day. 27th. Bank 4,700. Run to your bank account and update that as well. Bank account right here. Cash on 27th. Cash on 27th. Sorry. Cash on 27th, 4,700. The accounting equation, we shall just do a net effect. Now, every time you make a new transaction, you have to copy these totals and do these items. Now, is my cash being affected? The net effect is 0. I'm adding 4,700 and reducing 4,700, taking it to the bank. Bank being affected? Yes. Now I'll have 8,300 plus the 4,700 that I've just banked to get me to 13,000. So this will be now 13,000. This will be now 13,000. Now, since this is, of course, these are takings, they don't affect my liabilities, they don't affect my capital, but they affect my retained earnings. The higher the revenue, the higher the retained earnings. So my retained earnings that are in negative 11,500 will now have an addition of how much? Of 4,700, getting me to negative 6,800. Sorry. Yes, so I'll have negative 6,800 there. When I try to do my totals here, bank has changed. It's no longer 8,300. It is now 13,000. It is now 13,000 plus 20 plus 48 plus that. Wellness remains the same. And here, this is 114, remains the same. Then plus 6 minus 6,800. About to conclude the class. Minus 6,800, like that. When I try to add these two, gives me 155,200, which matches my asset equation this side. You get it? Huh? Remember, I just wanted to go through this for you to basically understand double entry much more. Electricity, paid monthly electricity and gas worth 1680. Electricity and gas are expenses, and those are are supposed to be debited in the respective account. So what we shall go out to do here, we don't have an account for electricity. We shall draw it up. We shall draw up an account for electricity. It's not light fittings because that is an asset account. So we shall draw up a new account for gas, electricity and gas. So electricity and gas account. Electricity. And gas account 1680. What date is this is on 31st. So 31st, we are going to debit. Remember, expenses, when they're increasing, we debit them. And we paid. So this is cash. This is cash. And how much is the amount? This is 168. Like this. I'll go to my cash account. My cash account. I think you can see I'm getting out of space. So this is what you have to know, that when you
Ma'am, I can't hear you. I can't hear you. Numbers, your turn.
I hope
Hello?
you can hear me right now.
Yes, now I can hear you.
Thank you. So before I went off, we're trying to say that we're trying to record our electricity and gas, and from our we're trying to effect it on our effect this on our accounting equation. We say that since the electricity and gas was paid by cash, our cash will reduce by 16,800, which we've taken into consideration to come to 69,720. So that is already actioned. We say this does not affect our liabilities. And then we went on here. It doesn't affect our capital, but it affects our retained earnings. And we are saying that our retained earnings that were at 66,800 will now reduce by an extra 1680, because this is an expense, and so it will reduce. So that is what we have. So when we make adjustments here, as you can see now, this for example, from here, this will be, instead of cash being at 71,400, it will be 69,720 plus 13,000 plus 20,000 plus 48 plus that. That is how it will be. 48,000 here will remain the same. When we come here, our total of equity, it will be the 114, which is still remains the same, but this time it will now be, we are subtracting 5120, like that. When you add these two, sorry, just a moment, this is this is 114,000 minus 512. Just try to confirm. So this was 11,500. This was 11,500. I think I'd taken a wrong figure, unless otherwise. Can somebody be able to remind us? Okay, I've tried to get that. So this would be 9,820. I'm just trying to pick it from the previous here. Since we went off, I lost something. Let's just try to refreshen this a little. So our electricity and gas, we've updated here. Then when it came here, this is what we have. So what we are saying that since it's electricity and gas, we shall adjust on our cash. So our cash is 71,400, and we are removing 1680. 1680. So it gets us to 69,720. I'm just trying to redo this. 720 There's no new asset coming through. It doesn't affect this, but there's something that affects our retained earnings. So remember, our retained earnings at negative 6,800. At negative 6,800, we are again reducing it more by the 1,680, which gets us to 8,480, like that. So this will now change to 8,480, and then the summation here, I'll change where the cash is. This is 69,720. So when I add these two, they should be able to add to the 153,520. You get it? Huh? So it's good for us to take note of that. So we have successfully recorded all our transactions. We've successfully recorded all our transactions in the accounting equation, as well as we've also been able to do the same thing when it comes to the ledgers. You get it? Eh? When it comes to the ledgers.
It has balance, I can see.
Pardon?
It has balance, it has balance.
Yeah, it has balanced. Now, I wish to say something here. From these ledgers, you balance these ledgers and you're able to get values that we can transfer to the trial balance. And I'm going to give that as an assignment. At least last time we learned how to balance off. Remember, we said we bring in the balance carried down and balance brought down, and balance of each account, and then transfer it to trial balance. You get it? Huh? So that is what you can do. And then you also try out the accounting equation. Now, as you can see, the way the accounting equation looks like is like a balance sheet itself. So sometimes when they give you a question on accounting equation, they can go ahead to ask you to draw up a balance sheet. They can ask you to go and draw up a balance sheet. So some of these values, you just transfer them direct to the balance sheet because you now have the totals. For example, light and fittings, this you just now arrange it. Of course, in the balance sheet, the statement of financial position, you have assets and you break it down, maybe current and non-current, and then also liabilities, current and non-current, and then equity. You get it. So when you take all this to the balance sheet, basically you already have some of this information. So it will be much easier for you to take it the other side. You get it? Huh? Yeah. So as you can see, let me just show you something small. When you look at this question, because this is a revision and question, I just want to give you an insight. Sorry. Let me just try to open this again. Okay, they haven't closed. It closed very fast. But what you can do, you'll go ahead and draw up a balance sheet. Even if you pass here through the ledgers, balance off them, and then draw up your financial statement of financial, maybe statement of comprehensive income, and draw up your balance sheet. Your balance sheet will look like this. If you look at that next page that had the balance sheet, in that revision and answer questions, you'll get to look at the balance sheet that the balance sheet does not divert so much from what you're seeing here. Actually, your total in the balance sheet will be 105, 520, and as you can see, it will be the same thing, even right there. So that sometimes the accounting equation can actually be used to prepare. It can also be used to prepare the balance sheet. It can be used to prepare the balance sheet. You get it, huh? So it's important for you to just appreciate that as well. You get it, huh? Just trying to share something small here. So, okay. This is a basically question. So this is I think this is the question we've been doing. This one does not have the answers. But when you look at the answers, and even yourself when you try it out, you get to realize how that works. You get it, eh? You get to realize and appreciate how each of those things work. Yeah. So I want to end here because it's really past time. Thank you so much for being part of this. Try out balance both the accounts and prepare a trial balance, and then you can share with me on the WhatsApp group. Last time I gave you an assignment and only one person tried out and also didn't give me the solution. Try out, take a picture of where you've tried out and post it on the WhatsApp group, and let me see how I can be able to support you on anything that didn't go well. You get it? So thank you so much for keeping here up to this time, and I wish you the best in the night. In case you have any questions, please drop those onto the WhatsApp group. I'll be able to respond to them. Yeah, so thank you so much, and I hope this has been helpful. Okay, I hope that this